But the thing is, I think markets have already priced that in. It is November 29th. It is the day after Thanksgiving, Black Friday. So happy Thanksgiving to all you Americans. I celebrated as well. I went to a family friend's house. It was great. I'm going to take you through the portfolio real quick, and then I'm going to talk a little bit about energy. And that's about it. A little bit about energy, specifically uranium, right? Because I always liked uranium. I have a big bet on uranium. My position on Cameco is just astronomical right now, and it keeps building higher and higher and higher. And also probably going to talk a little bit about the markets and how I think that. Oh, excuse me one second. How I think that the markets priced in a lot of the Black Friday shopping and great holiday season already into their valuations, and maybe, just maybe, we'll see a market correction, especially in light of Donald Trump signing of the pro Hong Kong bills that China's being so upset about. They might retaliate in economic measures, but I highly doubt it because they don't believe they have the upper hand. So we'll see what happens. It's very interesting. It's raining right now, so you may hear some noise from the windows. Okay, this is the account. I'm sitting at 74,335.07 at the moment. Now, this account's been sitting kind of passive for a long time, but a lot of the positioning on the account is designed to smooth off some of the volatility in the markets. So, for example, as you may know, my Apple call here that I saw, the 200 Apple call, it's very expensive now. It basically balances out my Apple position. Apple lost $56 today. My call lost $63 roughly, and so, well, anyways, my option positions are up $63. So even though Apple was down, my options up slightly, and vice versa will happen whenever Apple goes up. So my Apple position is virtually neutral at the moment. Now, other things that happened is EXK was up $54, and then various other funds are up and down a little bit. Wheaton Precious Metals up $11. The big one is Cameco, of course. Cameco is down $228, which is why my account isn't up more. It's actually down a little bit. Excuse me. Negative $228 in the position, Cameco position, and then minus $1 for the options play. But you can see here my options are winning me to $192 so far. My option plays, and what's involved in them, it's $25.50 worth of collateral, as well as 500 shares of Cameco, and that's a really good gain so far. Actually, I'm doing really well with the options because, like I always say, as long as Cameco sits between $9 and $10, I'm making money. So I like it. That's really good for me. Okay, so that's it with the account. As you can see, if you want to slow down and pause, you can see things. If you want to see the account, this is what it looks like. Apple is involved, but this is really not telling because a lot of this is in options, right? So these position sizes are not really that relevant. But here we have Apple, and it says only $1,391 because there's a trade that executed which made me collect the Apple gains this year, so I'll be paying tax for them, or I'll offset them with losses. So here is Cameco, is the second largest position now, over $11,000, pretty big, and this is the emerging market fund PCY, which just gave me a $21 dividend, which was great. Excuse me for the yawn here. No redos. I'm just doing this one take. You know what I mean? One take Drake. Okay, so maybe I didn't show you that well enough. There it is. You can go through the sizings over here. It's perfect. All right, now what's next? Next is talking. So why is the market gonna stop climbing because I believe, anyways, that a lot of the optimism is already priced in for this holiday season. Ever since Alibaba's numbers came out for their Singles Day or whatever it's called, it was just record-breaking day, right? And so we all knew that the consumer is going to be pretty strong this holiday season, and Alibaba, is going to report some good numbers or whatever, and just overall, this Black Friday that we're having right now and Cyber Monday, I believe we're going to report some really, really strong numbers as well. But the thing is, I think markets have already priced that in. I mean, we've run up so high for no reason. I mean, for that reason, rather. And I think that there's going to be some leveling off finally. Finally, this market's been just so strong. But so the other reason is what is going on there with the Trump thing, okay? So what is this guy doing? So he signed some bills. I looked into them briefly about basically they're pro Hong Kong, anti China bills. They says that like he's gonna limit the amount of rubber bullets they sell to Hong Kong or whatever, and um, it's just some kind of political stuff. It does make sense. Like there is actually some leverage there. It's not just fluff, but it's very small and it's still largely symbolic. But China's hating it. They're saying how it's going to lead to consequences and whatnot. So, the state's going to pay for it one way or another. Now, I don't know if that means, an economic way or in other ways, but usually, China's pretty stiff about their image. Like, if one thing I've learned that Chinese care about the most is their face, like saving face, especially the government, right? The individuals, not so much maybe, but even the one thing, like when I was in Thailand, I think just it's true for a lot of Asian cultures. I mean, I've only been on a layover in China. I haven't really done a proper trip, but I think a lot of the Asian cultures are very heavy on saving face. So they'll do anything to save face, and what does that mean? Like their reputation, the way they're perceived by the rest of the world, right? But even over here in the States, there we have a lot of Asian families, a lot of Asian culture here, and whatever's going on in their family, it's gonna be super hidden, super under wraps, not exposed, not talked about at all, And if you bring it up, it would just be met with a smile and nothing's wrong, everything's fine. Like, you want to exude strength and control, and I think that's very important. And so I think that pushing China, to the brink, or might result to some business consequences there. I think that that's one thing they have is they have all the production there, right? So who knows? I don't know what kind of way it's going to manifest itself, but one of the big powerhouses right now is they have production through Alibaba, whatnot. So I don't know if they're going to start cutting some of those relationships off, but it's possible. It's possible, but it surely is a sign for, it's a reason for people to be negative. All right, so I see two negative things in the horizon. Combined with the overvaluations, and combined with the fact that the rest of the market isn't scoring all-time new highs like the big companies which are dragging the markets higher. Combined with the fact that I've seen this movie before in 1987, was it? And a lot of the old timers, the old geezers, talk about the Nifty 50s back there, where there'd be this group of 50 stocks that could do no wrong, but the rest of the market was going down, and that continued for a long time until eventually the Nifty 50s collapsed as well. It seems like there's the same thing going on here with the Fangs and Microsoft. Well, maybe Netflix is out of it now. It's a little bit irrelevant since the other companies started their own streaming services, but it's still a large company nevertheless. And it seems like these companies are just dragging the market higher, and some other companies like Nike and whatnot, but eventually they have to correct as well. So I don't know if that's gonna happen. I'm hoping that actually Apple drops far enough so I can buy some more for next season. But I don't know. we'll have to see and find out. The other thing I want to talk about real quickly is uranium. I just listened to some interviews about how, you know, electricity is going to be needed in a big way, especially now that so many people are converting to electric cars, and the source of that electricity becomes more and more important. Now, we've been burning coal and natural gas to create electricity. Wind and solar is not that big of a part of the equation. So, what many people are saying now is that we're going to have to bring in the big guns, the nuclear guns, right? So, we need nuclear energy, which is, of course, good for uranium since that current infrastructure, anyway, is built for uranium. And just another reason to stay bullish on uranium, and another reason to stockpile on some Cameco, which is the biggest uranium mining company out there. And I don't know about the business ETF URA though, because it just seems to just succumb to the pressures that smaller miners are dealing with, which is survival in this, like unproductive price point that uranium sits at right now. And a lot of frozen mines, are just losing equity. They're having to sell stock in order to survive. And so I think the URA, the ETF, the Exchange Traded Fund, is losing a lot of ground to companies like Cameco because of that. All right. So, anyways, I still have the silver position. I'm trying to play it until April. I'm still trying to accumulate Cameco and trying to play the sideways market there and collect dividends. And I also have this neutral Apple position up until January 17th, and I'm hoping that it drops down so I can scoop up some shares. And that's basically where the account is at. Those are my thoughts on the market, on uranium, and on my account. Hopefully, you'll have a very productive and awesome weekend and enjoy yourselves. I'll probably make another video log on Monday to keep you all up to date. All right, I think that's it for now. Peace out.